Hello students. Today I'll take two more sums on redemption of debentures. Okay. Let us read the sum. Let me tell you, this is also a past paper exam sum. Okay, and very important sum. So I chose this one. I'll read the sum. On 31st December 2018, Plastocraft Limited redeemed 5,009% debentures of 100 each by converting them into equity shares of rupees 10 each at a premium of 2.5. Okay, so let us write down the details. Cost of redemption. Face value of debentures to be redeemed is 5,000 is a number into 100 each. So face value is 5 lakh rupees. Okay. Okay. And we are issuing equity share of 10 each at 12.5, right? So rather it is conversion issue equity share of 10 each at 12.5 per share. Okay. So number of shares will be issued. It will be number of shares, equity shares rather, to be issued is 5 lakhs divided by 12.5. Okay. So 25 lakhs divided by 12.5. So it comes to 40,000 equity shares. Okay. So company will be issuing 40,000 equity shares of 10 each at 12.5. So 2.5 is the premium. Okay. Since we are issuing new security at more than face value, less number of shares will be issued, isn't it? Yes. So let me bifurcate this 40,000 into capital and premium. So share capital let equity share capital, that will be more appropriate. Equity share capital to be issued, okay, in exchange of those debentures will be 40,000 into face value is 10. So 4 lakh rupees worth equity shares will be given and security premium will be again 40,000 shares into 2.5 each. Will be 40,000 into 2.5. See, total is 5 lakhs, isn't it? So we are exchanging old debentures for equity shares worth 4 lakhs and we are selling one equity share of 10 at 2.5. So we have earned security premium worth rupees 1 lakh. Clear? So total payment then is 5 lakhs. Okay, this was one part. Okay, let us read further. On the same date, the company also redeemed, that is on 31st December 18. Same day means on the same day, the company also redeemed 2,500 12% debentures of rupees 100 each in cash. Okay, so second part, second lot, rather I say, second redemption. Its face value will be 2,500 debentures of 100 each in cash. So no premium, no, nothing mentioned. So face value of debentures to be redeemed is 2,50,000, right? Okay. And we are redeeming that in cash, no conversion. Okay. So we are paying right here redemption in cash. Okay. So let me tell you some rules regarding redemption. Okay. So whenever we have to redeem the debentures, either we convert them into another security or we pay them via cash, that is bank or cash, whatever. So whenever we are actually redeeming them and not converting them, in that case we have to create DRR, debenture redemption reserve. Okay, we should be at least 10% of the amount to be actually redeemed in cash or buyback. Clear? So how much DRR is to be created? So I'll write down here. DRR should be 10% the amount to be redeemed. Okay. So 2,50,000 is the value. 10% of that. So it will be 25,000, right? Yes. And one more condition is there that we have to invest amount equal to 15% of amount to be redeemed in cash in some investment. So we call them DRR investment. Okay. So DRR investment is to be made to the tune of 15% of the amount to be redeemed before 31st March. Okay. And this investment is to be made before 30th April. Okay. I'll write down again. DRR investment is to be made before 30th of April. Okay. This is important. So two conditions are there when we are going to actually redeem the amount. If you are going to convert it, the rules are not that stricter. But when you want to actually redeem the amount, you are taking out the amount out of the company. Okay? When actually cash is going out, company's law says that we have to fulfill these two conditions. First, make a provision in the form of DRR to the tune of 10%. Previously, this was 100%. Now only 10% is required. Okay. And DRR investment, that is to make sure that company has sufficient funds, liquidity is there. We have to invest at least 15% of outstanding debentures. Okay. We have to invest outside the business. How much? 15% of amount to be redeemed during the year before 31st March. Okay. And the provision should be one year before, that is 30th April of same year. Clear? Okay. And there is no fixed date for creating DRR. You can create DRR before actual redemption. So you can pass entry for DRR even on 1st April, 30th April, it doesn't matter. But it should be before passing entry for redemption. Okay. But in case of DRR investment, it has to be made in the first month of the financial year. Before that month ends, that is 30th April, the investment should be made. Okay. So in this year, two redemptions are there, but there are stricter conditions in case of second redemption because we have to first invest money. Okay, before 30th April. So let us pass entry for second redemption first. Okay, because some requirements are there, so we have to pass entry for that second lot first. Okay, shall we do it now? Okay. So the entry will be on 30th April 2018. Have they mentioned which year we are following? Calendar year or anything? Not mentioned. So we follow financial year. Okay. So this year will be 1819, right? So on before 30th April. So we'll take the 30th April only. 30th April. Just a minute. 18. You have to first create DRR. It will be created out of P&L account. debit to DRR account. See, DRR entry you can pass at the end also. No specific requirement as such. Okay. So at the beginning only we'll do it. For DRR, what is the percentage? 10%. So much we are repaying in second lot, 2,50,000. So 25,000 worth DRR should be credited. This entry you can pass at the end of the year also. No issues. Okay. But since we are transferring or investing in DRRI before 30th April, we'll keep aside the money. So on 30th April, one more transaction will take place, that is investing in DRR. So DRR investment on debit to bank account. Okay. This is mandatory. How much? 15% of 2,50,000. So 2,50,000 into 0.15. 37,500. This has to be there before 30th April. Okay. The first entry can be made just before redemption. That's fine. Okay. Clear? Is this clear? Now we'll go for redemption of this second lot. Okay. On same day, these two redemptions are happening. So it doesn't matter whether we pass entry for second lot first or first lot first. But second one has some conditions which are to be fulfilled in the month of April. So we'll pass entries for that redemption first. Clear? So now let us make the debentures redeemable due for redemption. That will be on 31st December, as they said. So 31st December 2018. Okay. So second lot we are doing. There is no premium on redemption, nothing is there. So straight away we will pass entry for debentures becoming due for redemption. 12% debentures account debit to debenture holders account. To debenture holders account. Just a minute. Protocol. Sure. Bye. 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 Okay. So we'll continue. So I was passing this entry. Debentures becoming due. So 12% debenture account debit to debenture holder. And what is the total value? 2,50,000. 2,50,000. Okay. Then we have to make payment to these debenture holders. But before that, we will sell off that investment. Okay. So when we invested in entry was DRR investment to bank. So now when we'll sell it off, it will be reversed. Okay. Sometimes they may give you that it is sold at profit or loss. Okay. It may happen. So I'll show you what to do in that case. So now for the time being, I will pass the entry. What is there? Bank account debit to DRR investment. Okay. What is the amount? 37,500. 37,500. Okay. Now suppose in this case, if they tell you that it is sold for 40,000. So in bank you will receive how much? 40,000, right? So the profit will be transferred to DRR account. Like this. Entry will change like this. Okay. How much is the difference? 2,500. Clear? Okay. If loss has been there, then DRR will be debited. That's it. Nothing else. Okay. But for now, in this case, nothing is mentioned. So we presume it to be sold at face value. Okay. So now funds are made available, but some funds are we require much more amount. So now we'll pay them 31st December debenture holder account debit. Bank full amount like 50,000. That's it. Okay. Then now this DRR which we had created out of PNL, now it is not required. Clear? That we can transfer to general reserve. Okay. I'll pass entry for that. Same day. DRR account debit to general reserve account. That's it. What is the amount? We had kept a balance of 25,000 in this account. So that will be now transferred or rather will be available for used to pay dividend also. Clear? So the second lot entries we have passed first. I will go for that first lot in which conversion is that. Okay. Now let us see if any condition is required there. No. Okay. It's conversion. So funds are being kept in the company itself. Just change of security. Okay. Is this clear, students? Okay. So now let us make the debentures due for redemption. So on 31st December and pass the entry. What is the percentage of debenture? It is 9%. Okay. So 9% debentures account debit to debenture holders account. Okay. What is that? 95% became 95. So amount is how much? 5,200. So 5 lakh rupees. 5 lakh. Okay. So we are issuing equity shares to this debenture holders. Okay. So I'll pass entry. Debenture holders account debit. Now we are issuing equity shares. Its face value is 4 lakhs and premium we are earning is 1 lakh. Okay. So 4 lakhs worth equity shares are given at 5 lakhs. So that extra 1 lakh we have earned. So debenture holders will get to equity share capital worth 4 lakhs. Here I'll write 5 lakhs full amount to be redeemed We are issuing equity shares whose face value is 4 lakhs at 1 lakh premium, right? That premium is called to securities premium account. Clear? Okay, there is no bank involved here, right? We are going to give equity shares to them. Is this clear, students? There is no DRR or there is no need to transfer to any reserves in this case conversion. Okay, I hope this is clear to you. You can take screenshot if you want. Okay, so this is done. So we'll go to next sum. More sum is there? Yeah, this one. So let us read the sum. Prudence Limited redeemed 50 lakhs, 12% debentures at a premium of 5%, fully out of profit on 30th September 2018. The company had a debenture redemption reserve DRR rupees 10 lakhs. So 1/5 of the amount, that's 20% of DRR is already created. This is as per old rules. Okay, in old rules we need to have 100% DRR of the face value, but now it is 10% only. So already 20% worth DRR exists. So we need not transfer anything to DRR now. Is this clear, students? Okay, so rules are 10% of face value in case we are going to redeem it in cash, and 15% amount is to be invested. So they haven't mentioned anything about investment. So let us invest the amount. Can you tell me the date? How can you tell now? Okay, so date will be 30th April 2018. Okay, no transfer to DRR is required because already, as per old rules, they have already transferred 20%, whereas the requirement is only 10%. So already we have sufficient DRR, so need not transfer to DRR. Directly we'll invest. Okay, so on 30th April, 30th April 2018, we'll invest money. So DRR, investment account debit to bank. Okay. So how much will be the amount? 50 lakhs into 15%. We'll make it calculation. 50 lakhs into 0.15. So 7,50,000 worth investment is to be created or made rather. Okay, so that we did. Okay. Now on 30th September, they are going to redeem it. So let us pass entry for that 30th September 18. Okay. Let us make the debentures due for redemption. First line says redeemed 50 lakhs, 12% debentures at a premium of 5%. So we have to provide for this 5% extra. Okay. So I'll pass into like 12% debentures account debit premium on redemption account debit to debenture holder account, right? Clear? Let us write the amount. Face value is 50 lakhs. We are paying them 5% extra. So 50 lakhs into 0.05. 250. So 52 lakhs, 50,000, 52 lakhs, 50,000 is payable to debenture holders, right? Now on 30th September 1st, we will make provision for money. We'll sell off that investment. So on again 30th September, we'll sell the investment. So bank account debit to DRR investment account. Okay. The investment is just worth 7,50,000. I told you what we need to do in case profit or loss is there. Clear? So we have sold it. Now let us pay the debenture holders. On the same day, we'll pay them. Debenture holders account debit bank account. How much amount we have to pay? 52 lakhs 50,000, right? Okay, so that's it done. Now the balance in DRR can be utilized to be transferred to general reserve, right? So DRR account debit, general reserve account. How much balance we had? 10 lakhs. 10 lakhs. Ah, is this clear, students? I hope this is clear. That's it. Okay, we'll read the sum once again if we have missed out on any item. That premium on redemption was there, na? We can write off against security premium or P&L account. Let us use P&L only. So again, 30th September, we'll write off that loss against P&L. So whichever reserve you use, debit that P&L account debit. To premium on redemption. Okay. How much amount is to be written off? 2,50,000. You can use general reserve also because we just had balance transferred in general reserve. Clear? 2,50,000 worth. So anything left, just check for second and third, fifth. Yeah, everything done. So that's it, students. So sums like this will be there. So do practice these sums. The sum which I showed you yesterday, making ledger accounts and all, that is also very important. I'll just take you there. Yeah, this one sum. This one we did yesterday. Passing journal entries and ledger account. See this sum is similar to the one which we solved. In this also we have to prepare debenture account, debenture holder account. We can practice this one. Okay. These two sums we did today. This one and this one. Okay. So we are done with all past paper questions. Okay. So I'll take another lecture once we are done with the previous paper. Okay. So I'll let you know in the group. Then I'm going to take that extra lecture, important lecture. I'll put in the group. Okay. Thank you for watching.